Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. This week we have tried to not bore to you with lots of statistics analysis as usually we do, showing you the weak points in the United States economy and what particular triggers we need to keep an eye on, where actually the situation could out of the control. But instead of that, besides actually yesterday we talked about this in the Forex report, and showing you what the real weakness with the Fed position and actually explain some interesting moments. Today on the gold market analysis, we have tried to climb a bit higher on the macro level and show you what's the really overall situation is coming to in terms of the United States debt, in terms of the Fed policy, and in general view on the fiat money. And why is the negative process currently is accelerating, and we see some really interesting, occasions, if we could call it in this manner. So somehow the central bank's demand for gold has hit the all-time high last year, maybe near the all-time high that was in 1970s. Right on the background with some difficulties in the United States economy, and on the background of the cycle of the rate increasing globally. So hardly this is just occasion, and it means that central banks is preparing to something, because as United States statistics shows us that actually we do not have any problems. So you see job market really strong, inflation is dropping, gross domestic product is rising. So what's the problem? Why you need to run into the gold, accumulating the reserves and so on? So behind of that stands really big problems with the debt in the United States and with the actually massive devaluation of the United States dollar that actually you can't see by far, but actually it is going and now is accelerating. And we're just stepping in a period where the fruits of the rate increase starts to appear. All this time before, despite we have the high rate for some time already, but it is lagging process, so it brings the effect a bit later. And by the middle of this year, maybe even closer to the end of the year, we should get some really feasible results of this process, and hardly it will be really pleasant. So in a weekly report on the gold market, we have tried to show you what's the particular problems stand on a high level, on the macro level, economical level, and why, if you are not really believing some recession and crash of the economy, why you still, need and make sense to keep some gold in your portfolio. So that is what we discussed in the weekly report. In the technical side, as you could see, currently, actually, despite that we have really great plunge on the Friday, it's not many things to talk about on the technical side. Yes, our double ripple sell pattern worked perfectly. It's completed even the minimum target that we discussed. So remember, we said that it should be somewhere around 1870 should be reached. It's daily oversold, trend line support, confidence support. Technically, this combination suggests that we should wait for a bounce. We do not intend to take the long position in this confidence area. But before taking the new short position, we need to wait for a pullback. So that it means that those of you who would like to take the short position, but better to wait and see for a pullback, because it's not really comfortable to sell at the strong support and never sold. Those of you who have short position, you need to think about the protection of your position or even to booking some result of your position. That's actually the simple logic. In general, if you will read our weekly report, in the technical side as well, you will see that really the big blossom of the different patterns might be in the nearest time. On a weekly chart, on a monthly chart, on a daily, it really could be a really big amount of the trading setups on the gold market. It will be not really boring, so it will be lots of stuff that we could discuss in the near term. On the lower time frame, actually, it's also not many things to say. It's just because we have no reaction yet. So market just collapsed to the support and then market's closed. So we do not see what the effect will be, what the reaction will be on a strong daily support. But supposedly, we probably will consider 90 even area, maybe 1883 also, for possible taking the new short position. 90 even looks more preferable just because it stands outside of the oversold. Here's the oversold 1884, so that's why this level stands very close to it, actually at the border of the oversold. This level is a bit preferable. Besides, this is confidence, and let's focus on this level first, but mostly it will depend on the shape of the pullback, if it will happen at all, of course. Depending on the process, what the patterns will be formed, we will be able to estimate the target with the more precision on the next week. So currently, we just could discuss these two levels and see what will happen. That being said, currently we are not considering taking any new long position, only at least on the daily chart. You could, if you're a scalp trader, you could try to trade it long, because on the daily actually we have the stretch pattern, combination of the confidence support and the oversold. But this is really tricky, and if you're not confident enough, this would be better not to do this. For taking a long position, you probably need to wait for some signs of the bullish reversal. Maybe some minor patterns will be formed on the on the hourly chart, on the 5-minute chart. If you will get something, you will try to. You want to try it. Well, probably you could, but this is not our primary object. For us, it's more important to get the pullback. That's why we're not considering taking the longs, and consider taking the short position with the downward trading and downward continuation of this performance. That's what we will be watching for on the next week.